Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, November 12, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, she pulled back a little bit toward home base. Not that much just yet, but a little bit toward home base. We started talking about this last night. The fact that she was extended from home base, not only on the daily chart, but also on the weekly chart as well. That's a pretty big weekly up candle. However, there is market symmetry, and we are in an on-time type of situation. There is something else to consider. Actually, two things I want to bring to your attention. This week is regular way options expiration week, where weird stuff does happen, not necessarily in any one particular index or stock or commodity or anything like that. Just around the horn, we watch out for the unexpected, if you will, as we always do throughout the markets. The second thing to note is we're coming up into one of those periods of seasonality. Not next week, but the week after will be the Thanksgiving week holiday. Just as an aside, the market has a tendency, not 100%, but a tendency to be bullish during that week. Jordan has some statistics on that. It's around 75% of the time, maybe a touch more, where the market actually will trend up that week from Monday through Friday for the most part. We're not suggesting doing anything with that information, just saying we're coming into a seasonality bullish period of time. That doesn't guarantee bullishness. It's a seasonality bullish period of time, typically, generally speaking, type of situation. And by the way, if the market runs sideways back and forth up in this neighborhood near the highs, not pulling back too much, what happens? The 20-period moving average begins to creep up to price. As price goes sideways and eats time off the clock, what it does is it resets the gun, if you will, recocks the gun, resets the tape, and you no longer have some of that air-quoted overbought condition no longer extended away from home base or the 20-period moving average. Food for thought. Write that down. Put it on a sticky note. Let's take a look at the market from a different perspective. Right of the vertical is today's activity. This is an intraday 5-minute chart. Let's take a look at the 9:05 post. This is Eastern Standard Time. It's the setup post. What's on the board today? The Globex people were pushing price a little lower, but the pre-market thieves managed to run them back up toward the flat line. All right, fair enough. Here we go. 598.80 is our early pivot. All right, well, that seemed to be important. Early in the morning, they tried to stay above the pivot. They tested it a bunch of times, but then they failed at the pivot, never to return again. 598.80 was our early pivot, was it not? It pays to know your pivot. Put that in the sticky note camp. So we don't have to worry about what happens above because she couldn't really get above. But what happens if she stays below? How about this? 596.15 to 594.85 is a support area for a bounce back in the other direction. 596.15 to 594.85, little more than a buck. Let's call it $1.30 for argument's sake. And it's not really an argument. That's how the math works out. Same 5-minute chart, and what do we notice? Well, first off, she hovered over 596.15 a little bit, creeped into it, bounced a little bit, but that's not how we like it. We like it first time, best time. We don't like them to come up short, eat some time off the clock, creep in. That's not our favorite setup. But look down here, 594.85. Either way, what I left the traders with today in the live room was, this is a zone of support. They will bounce back in the other direction from the zone of support. That is a quotation from the live room today. It was written on the board before the opening bell. It was a quotation from the live room, 596.15 to 594.85. Let's just say, for argument's sake, you split the difference and say, all right, let's say I did buy them both, even though they creeped into the first number. So I'll take this off the board. Here's my entry. There's my average cost. Even though we did catch the low-ish of the day, they spiked it, ripped it back up in the other direction. That's a pretty nice trade, wouldn't you say? Wouldn't you like to know about that before the opening bell? What are your notes before the opening bell? What I urge you to do is pause the video, read the notes, and go back to the chart to double-check the work. Everything traders need to know to find success with the S&P during the morning session is in here each and every day. This is a morning business. We're looking for the morning trade 2 or 3, couple of 2-3 stocks on the move, some live stuff in the live room, and we're good to go. It's a morning business. We did have some stocks on the move today. Only one hit its entry objective. It was Micron. So we're going to take a look at the chart real quick. These were the 3 numbers on the board in Micron, 104.10, 103.02. You can see what happened early on. They went down to the second number, back above the first. Hung around in this range the majority of the day. It's one of those no harm, no foul situations. The takeaway is the numbers work. What's going on over in Camp IWM? They were on what's called a give back from yesterday's rally. Remember, we talk about divergences. One way or the other, divergences will resolve themselves. Either Camp IWM was going to come back down, or the S&P was going to rise up to the level of the leading indicator leading on the upside, not only Camp IWM, but the folks down at the transportation department, which we'll get to in a moment. And by the way, what's that blue line running across the bottom of the screen? Funny you should ask. It brings another dimension to inside the numbers and the live room. These are the markets right now that we're covering each and every day. They'll be somewhat dynamic. We might throw 1 or 2 out, bring a couple more in. We might just add a couple. You never know. It's by request and based on demand as well. But here's what I want to point out. Now, I want you to do the homework and look at the other markets, but I'll just point out the IWM and support number 1, 236.75. 5-minute chart, right of the vertical is today's activity. Low of day, not far from 236.75. They came into it, they spiked it, they ripped it back up in the other direction. How you doing? Where are you getting your numbers from? And this whole inside the numbers situation, price is going up pretty soon. I'm rolling out some new stuff. More value for the members. Tired of giving my stuff away, but I will not, and I repeat, will not, underline, will not raise prices on existing members. I will grandfather in existing members. Whatever price you paid is the price you pay. The price increase will be for new members and cancel and restarts. How are we going to gauge the IWM from a daily chart perspective? What we're going to do is we're going to say that the low here on this big gap higher open from the 6th of November, a few days ago, that's our bogey. Below that, and she starts coming back to retest the former breakout area. There's a gap down here, some moving averages on the daily chart, and the whole picture begins to change. Now, what happens if she eats time off the clock for several days more and stays above the low of that day, and the low being 232.75? Well, then she's building energy to yet again make another move higher. Can that happen? Yes, it can. Can she go lower? Yes, she can. We don't know which one will happen. What we do is analyze the information we do have, and we use it to the best of our ability, to our advantage, to make decisions going forward. For example, Let's say she closes below this low for a day or two. Are you going to all of a sudden just buy the market indiscriminately, figuring she's going to go right back up? No, now I'm going to be looking for, A, the most recent breakout area, fill the gap, maybe a spike of the gap, but I will get interested in a long play if she gets below this low. But it's not right away. You have to have patience. You have to know what you're looking for. First, you have a target on the downside. The target is for the short entries. They need targets. Also, target entry for a long play could be a double barrel trading situation. What exists on a daily chart and a weekly chart exists intraday. These are the things that we discuss in the live room each and every day. We take trades together when they're available. I'm asked about charts. We analyze charts and we go through lesson after lesson after lesson. It's a place where traders get to do two things. Number one, make money. Number B, compound their learning. These are things taught every single day in the live room on itself. It's like your account compounding. Now, what about the folks down at the transportation department? Down 182 points today, about 1%, wiping out yesterday's gains for the most part. Not all of them, most of them. Filled the gap left open from a couple of days ago. Are we going to read too much into this? No. They had a big up day. They're eating time off the clock in an uptrending situation. What do I say about the trend? The trend is your friend until it's over. This is a snapshot of the weekly chart, uptrending. Those of you that have been around a while remember the triangle pattern we had on the board, and they were either going to break out of the upside or down of the downside of the triangle pattern. They are breaking up, and they are breaking up in the direction of the former highs. Period. Full stop. This was a down day, yes, but there's a lot of room to eat time off the clock from the breakout situation, giving the 20-period moving average or home base a chance to creep up toward price, again, wiping out some of that air-quoted overbought condition. What about the Q people? Why are we starting with a 5-minute chart? Right of the vertical is today's activity because we're switching things up a little bit. Have some fun for a second. The two numbers you saw in the grid of all the markets we're covering, support 1 and 2, were 512.65 and 510.90. I would say those are two important numbers today, wouldn't you? That's what that 510.90 looks like on the daily chart. And again, they're doing the same thing everybody else is doing. They're really just eating some time off the clock at present, working off some of that fake and unmeasurable overbought condition, letting home base creep up to price as they eat time off the clock. Can they go up a little bit, go down a little bit? Absolutely. If they get below this low from the other day on the 7th, then they'll come and fill the gap and they'll be closer to home base and they'll start to have already worked off the overbought condition, and then they'll also retest the most recent breakout area and again resetting the tape, recocking the gun, as they say. In an uptrend, it's a natural garden variety pullback-ish situation. XLF was down 15 cents today. We're going to make a federal case out of that? No, they went sideways all day. Are we going to make a federal case out of that? No, we're going to move on. What about Smashmouth? We got our eye over here, the semi-space, because of that situation we have from the big down day, the one we talk about every single day. So they were down again today about 6 or 0.7%. Not really a big deal, but they were down about double percentage-wise of the spiders, but they weren't down as much as the IWM per se. They weren't down as much as the transports. So we're not going to make a federal case out of that. We will note, we are the umpire, by the way, calling balls and strikes, and we will note that they did have a situation where they tried to get below but did snap back and closed above home base or the 20-period moving average. Now, once price is riding back and forth on a 20-period moving average or any moving average for that matter, it diminishes the importance of that moving average. So, for example, when price is coming from afar and it hits a moving average for the first time, we bring into the mix first time, best time. That's our old friend, first time, best time. But when price is going back and forth or continues to touch and trade around the moving average, it's just another place on the chart with less importance than it had when it was first time, best time. Write that down, put it on a sticky note. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.